Video here, we talked about market structure and other blocks. On our previous video, we talked about market structure and other blocks. And on this video, we are going to be talking about market structure, liquidity, and point of interest, because that is what the whole strategy consists of. So let me just quickly write it down so that you can also pay attention to it. Market structure, liquidity, and point of interest, so POI. So the whole strategy here consists of market structure, market structure, liquidity, and point of interest. And I'm going to be breaking it down like very simple. Like I'm going to be breaking it down very simple so that you can get the concept, go to your chart, pay attention to these levels, and you're going to have a high win rate. Yeah. So market structure, let's go back to the basics here. Market structure is the direction in which the market is heading to. And just as I said, there are two things the market will be doing here. The market can either be in a trending market or in a ranging market. So the market could either be trending to the upside or trending to the downside, or the market could either be ranging. Let's go back to the basics here. For an uptrending market, we said that an uptrending market creates series of highs, lows, higher highs and higher lows, just like this, higher highs and higher lows. And this has to be very clear where the direction is heading to an uptrend. Now, let me give you a case scenario here. As you can see, I dropped this signal on the platform. If you're on my Telegram group, you will notice that I drop all of this signal there, and you can also, I'll drop the link in the description box below so that you can also join. Yeah, so if you look at this trend in which we have here, you can see that it's very clear what the market is doing. Series of uptrend, and I took advantage of the uptrend and joined the trending market, of course. Yeah, so as you can see, this is one thing the market would be doing. Yeah, the market could either be going on an uptrend or the market would be going on a downtrend. So basically, the market, this is a trending market. Yeah, this is a trending market. A trending market could either be going up and be going, or be going down, and it has to be very clear. It has to be very clear. Do you see how clear this one is? Yeah, you see how clear this one is. You can really tell from the direction of the market. You can really tell that the market is creating series of higher prices. Yeah, so this is the first part of the strategy: understanding the structure, understanding where the market is heading to. Once you understand where the market is heading to here, which is market structure, then we'll talk about liquidity. But before we talk about liquidity here, let me talk about switching structure here, because market structure help us to identify when we have a trend and when we have a switching trend. So let me just talk more on the switching trend as well. So we have an uptrending market. It's very clear that we have an uptrending market at this point here. And this is where we have our other block, which is like a demand area where we don't expect price to go below. Now, if we have a switch just like this, where the market failed to hold below the other block in which we have here, the market failed to respect this other block and it break below. Now, this, what happened here is considered to be a shift in market structure, an MSS. We'll call this a shift in market structure. Let me put that one down at this point. As shift in market structure. So when this thing happen here, we call this a switch in market structure. And whenever we have a switch in market structure, this is telling us that the market is going from an uptrend to a downtrend. And the same thing is also for a downtrended market here. If we have a market that is creating series of lows, highs, like this, lows, highs, just doing a thing, and we have this. Now, this zone here is considered to be a switch in market structure. Yeah, markets changing from up to down. So basically, this is, you want to really understand what the market is telling you on your market structure bias. Yeah, you want to understand when we are going up and when we are switching from up to down, and you want to understand when we are going down and when we are switching from down to up. So very important. Once you're able to get the structure aspect of the strategy, then we now come down to liquidity. Now, liquidity, yeah, I mostly pay attention to inducement liquidity, yeah, and the market will always create inducement liquidity for you. So I mostly pay attention to liquidity. But before we talk about liquidity, yeah, let's talk about point of interest, because this is also very important. Just as I told you, yeah, whenever you are in a trend, we always have 2 points of interest. So basically, I make use of 2 points of interest, yeah. And on the previous class, I talked about the order block. On this class, I'm going to be combining the order block and the breaker block, which are the 2 points of interest in which I make reference to each and every time. So let me give you a basis of an uptrend. So let's say we have a market going like this: higher highs, higher lows, higher highs, and now identify. Now the first thing you want to do is to identify where the structure is heading to, identify where the market is heading to. Once I identify where the market is heading to, the next thing I want to do is mark out my point of interest. Now, where is my point of interest? I have 2 points of interest here. The other block that is at this point is my point of interest. The other block at this point is my point of interest. The breaker block. Now, at this point, you also have an order block which would fail to hold. So, a failed order block is an breaker block. A failed order block is a breaker block. So, I have a order block at this point which would now turn to a breaker block when it fails to hold, and this zone will be my point of interest. So for point of interest here, you will always have 2 points of interest in the market, and the entry will determine which one you are going into. So we have 2 points of interest in the market. This is for an uptrending market. You have 2 points of interest here. Just as I told you, the strategy consists of market structure, liquidity, and point of interest. So you want to understand market structure, you want to understand point of interest, you want to understand liquidity. So we have highs, lows, highs. Where's your point of interest? The breaker block, which is the failed order block, and the main order block. And you want to make sure all of these zones are yet to be mitigated. Now, once you see a expansion to the upside just like this, you pay attention to your point of interest. Where's your point of interest? The breaker block and the order block level. Now, you now wait for inducement liquidity, which is the liquidity we have here. You now wait for inducement liquidity here to pick the valid point of interest which you want to use, because you are not going to be, you want to have a precise zone in which you are taking your trades from. You want to have a precise zone in which you are taking your trade from, so that you'll be able to have a good risk to reward ratio. Now, the next thing you want to wait for is an inducement. After a switch like this, an inducement, the first retracement after the break in market structure, the first retracement is your point of interest. The first retracement is your inducement liquidity. The first retracement is your inducement liquidity. Yeah, the first retracement is your inducement liquidity. Now you want to make sure that the inducement liquidity did not tap into your point of interest. Now let's assume this first retracement, after this expansion to the upside, the first retracement tap into this breaker block here and it bounced back up. Now it now means this your point of interest is no more valid for a trade entry. Yeah, it's no more valid for a trade entry. Now the market would give you this as an inducement. Yeah, and your first point of interest is already being mitigated. So once this point of interest is already being mitigated, and mind you, this retracement can come all the way down. Sorry, the retracement here could come all the way to this level, but you just want to make sure that it mitigates this one and it did not mitigate this one yet. So once it mitigates this one like this and it bounced back up, you now have an inducement level. You now have an inducement level, yeah? which is your liquidity, inducement liquidity. Now, this point of interest is no longer valid for a trade entry. It's no longer valid for a trade entry. Once the market is retracing back down, once the market is retracing back down, it's going to take out this low as a liquidity inducement liquidity. Once you take back this low as an inducement liquidity, it's going to be reacting from this point of interest that is yet to be mitigated. Now, mind you, this point of interest is mitigated. This point of interest is not mitigated. Now, you are looking for a fresh zone and a fresh point of interest that is not mitigated to take your trade from. So once the market is retracing back to the downside, it's going to take out this zone as liquidity inducement and react from this point of interest that is yet to be mitigated before it bounces back up. So in this case scenario, basically your entry would be at the order block here, and you'll be looking forward to taking your profit at the high. And this would give you a solid entry just like this. You have your entry and your stop loss just like this. You already understand a precise zone where you are taking your trade from. Yeah, you understand a precise zone where you are taking your trade from, and you pay attention to it. Now, the same thing works for a downtrended market. We'll also do a live recap chart. Yeah, for a downtrended market. Yeah, when we have series of lows where the price is just giving you low, high, low, high, then this one. Yeah, now, if you pay close attention to what happened here, you are going to understand that we have a structure here: lower lows, lower highs, lower lows, lower highs. Then what happened? This is a point of interest which is already been mitigated. So this retracement already mitigated this our point of interest at this point. The retracement already mitigated this our point of interest at this point, causing a inducement. Now, you want to make sure that after a break, you always want to wait for an inducement liquidity. You always want to wait for inducement liquidity so that you don't be a trap in the market. So once you wait for that inducement liquidity, if the inducement liquidity, which is the first retracement after the breaking market structure, if the inducement liquidity go back and react from this zone here, it means this zone here is not valid for a trade entry anymore. So you are going to be looking at the order block at this level that is yet to be mitigated. You are going to be looking at the order block at this level that is yet to be mitigated. Once the trade is coming back down for a retracement, it's going to basically take out this zone as inducement liquidity. Once you take out this zone as inducement liquidity, is going to react from this unmitigated order block in which we have here and sell back down. So you can see how you can pay attention to using 2 points of interest and understanding and having a precise entry of where you're going to be taking a trade from, either a long trade setup or a short trade setup. Yeah, so we give you a more precise levels to your trade. Make you have a more precise levels to where you're taking your trade from. Let me So for this case scenario now, this would be our trade. Our entry would be on the unmitigated order block here. Let me do this. Oh, I don't know why this thing is just giving me this one. So our entry would be from the unmitigated level. Okay, like this. The low, the unmitigated order block, precise entry. This is how you get precise entries. Yeah, this is how you get precise entries. Then your take profit would be at this low, because immediately the market take out the liquidity inducement here and react from your point of interest. Your unmitigated point of interest is now coming back to take out these levels in which we have here. It's coming back to take out this level in which we have here. So let's look at some chart example here, and let's see some of the trade I caught using the same model. So if you pay attention to what happened here, this is hype USDT. I've been rocking this pair for a while right now. So let's see what happened here on and I shared all of this trade. Yeah, I shared all of this trade on Telegram. So if you know my Telegram, you could just what's it called? You could just follow up so that you get the free signals in which we post. So we have a structure here. I told you the first thing you want to pay attention to is structure. We have a structure here. So we have a high, we have a low, we have this level, we have this level, we have this one over here. Then I told you you want to pay attention to structure and you want to pay attention to inducement liquidity. So let's start from this first trade in which I caught here. I told you we have 2 points of interest after an expansion. So this is a low, this is a low, and this zone here is a high. So we have a point of interest here, and as you can see, this point of interest now is no longer valid for me. This breaker block point of interest is no longer valid for me. Why? Because after this break, after we had this break over here, you can see that the retracement at this point here, it reacted from this point of interest. It reacted from this point of interest and it bounced back up. Then it makes this zone for me to be like an inducement. I could either mark this zone as an inducement, then I will now look for an unmitigated order block. An unmitigated order block which I'm going to take the trade from. So for this first trade here, my unmitigated order block was I forgot the time zone in which I saw it. I think it's on 30 minutes. My unmitigated order block, where is that chart? Yeah, I think it's this one for the first trade, yeah. My unmitigated order block would be here. So the bullish run before the bearish run, you can see here, we have an unmitigated order block line at this point. Let me mark that out so that you can see it. I have my unmitigated order block line at this spot here, and that is why I took my entry. So you want to always make sure that you have an inducement, a point that would induce traders, and an unmitigated order block. So you can see that this order block that we have here is unmitigated. We already have our couple of inducements, then we have an unmitigated order block. The market is going to come, take out all of this low as inducement liquidity and respect the unmitigated order block and bounce back up. So that was how I caught this first trade. Now let's look at the second trade here. Let's look at the second trade. Now you can see after the retracement, then we had a retracement, took out all of the inducement liquidity, then we have another expansion to the upside. Now after the expansion to the upside, you can see that the market retraced all the way to this level. After it retraced all the way to this level, we had a break in market structure at this point. After that break in market structure that we had, it created an inducement for us at this level, then it continued going back up. So I now understand where my inducement liquidity is. I understand the point at which my inducement liquidity is, and I expect the market to take out my inducement liquidity before going back up. So that was how in this current trade right now, in which I still share this trade with the community. I share this trade with the community here. So this is my point of interest. Now my breaker block zone, which is another point of interest, is not valid because after we have a break, the market still went back down and reacted. So it's not valid. This breaker block here is not valid. I only have my other block which is unmitigated and valid. So this is the unmitigated other block that is valid for me. That is why even after all of this move here, even after the proper break, the market will still come down to take out this liquidity inducement in which we have and respect an unmitigated order block. Remember, your order block supposed to be unmitigated. Once you take out the inducements, respect from the unmitigated order block, you should just continue bouncing back and continue going in the initial direction. Yeah. So let me give you a textbook example here, because before we continue. So this video is getting a little bit lengthy, but I just want you to really get the concept here. Any trade you are marking out, the first thing you want to understand, the first thing you want to watch out for is your market structure. So if the trade is going on an uptrend like this, an uptrend, you want to pay attention to your levels. The first thing you want to pay attention to your levels. What are your levels? You have a swing low, you have a swing high, you have a point where we have a break in market structure. Pay attention to all of these key levels. Break in market structure is a key level. Your order block zone, yeah, is also a key level. Your other block give you a more percentage push, yeah. But before you take, after an expansion to the upside, you don't just go ahead and place trade at this point. This is where liquidity come into play. Now this is your point of interest. This failed order block here, which is now a breaker block, is also your point of interest. Yeah, you want to watch out for where the, after the expansion, where was the first retracement. There would be a first retracement. If the first retracement come and react from this zone, it tap into this point of interest before pushing back up. This point of interest is no longer valid. Now mind you, this point of interest, sometimes here your trade might come react from this point of interest, then it will give you something like this. It doesn't have to necessarily expand to the upside. Your inducement don't necessarily have to expand to the upside. Yeah, it comes in different way. Some inducement will just react and give you this momentum push, but you just want to make sure after it reacts from here, it gives you that push to at least the 50% zone or close to this level, and come back down, react from the main point of interest that is yet to be mitigated, and will continue going back up. This zone also is an inducement. This zone also is an inducement. This also is an inducement. So it reacted from this place, it induced, it gave a force push to the upside, then you just come back, take out this zone as inducement. But you want to make sure if the market presents itself like this, you want to make sure that this reaction from here go up at least 50% or close to this level, yeah, before it now come back down. You place an entry, you place your entry at this point, because you just come back, take it out, use this zone as inducement and continue going. In some other instance, it might just appear like this. It's still an inducement. You just come back and take it out and just keep going. So this is just like using point of interest. Now we've talked about 2 points of interest, which is breaker block and order block, and how to navigate them. But mostly here, I've paid attention to the order block entry. Now let's talk about the breaker block entry here. The breaker block point of interest. Now let's say we now have the same case scenario: higher highs, higher lows, higher highs, higher lows, higher highs, and this is the recent one. Yeah. Now you want to understand. Sorry. Let me give this a more clearer approach. So highs, lows, highs, lows, and high. What's the recent point in which we have in the market? This is the swing level from the, after you see an expansion in the market like this, either to the upside or to the downside, the first thing you want to pay attention to is marking out your key levels, your breaker block point and your order block level. So these are the most important key level. Yeah, you have your breaker block level, your order block level, and your breaker block level. Now, once you see an expansion here, then you mark out your 2 points of interest here. Now, if I told you want to trade from a unmitigated point of interest, so if we have the first retracement, which is your inducement, mind you, the strategy means you also still have to wait for inducement. So if we have your inducement and it did not tap into this point of interest here, it definitely means this zone here would now be your liquidity inducement, and this would be your point of interest, because you want to trade from the point of interest that is closer to your liquidity, inducement liquidity. You want to trade from the point of interest that is closer to your inducement liquidity. Yeah. So this breaker block now, what this means is that this breaker block now is closer to your inducement liquidity. So the price, since this zone hasn't been tapped yet, in most cases the price will just do something like this, tap this zone, go back up, and sometimes now come back and still react from here and just continue doing this thing. So this is what you want to also pay attention to here. You want to pay attention to the level, but you want to pay attention to the level that is not yet being mitigated. That is where you take your trade from. If you see something like this and this point of interest is not yet mitigated yet, which is the breaker block level, and the market gives you an inducement, then you should know that as the market traces, it's going to take out this zone as inducement liquidity and react from this zone and bounce. So this is just how to use the 2 points of interest in which we have here on a trending market. This is how to use the 2 points of interest in which we have on a trending market. And I believe this video I've talked about the breaker block level, the order block level, and I also did this on the charts here. So on the next video, which is the next series, we're going to be breaking down this in a more detailed way using series of chart example. I've used the same strategy to get a lot of trade, and I'm going to be sharing all of this trade on different pairs using the same strategy so as to show you how it works. So this would be the second series of the strategy. This will be the second series of the strategy, and it is what it is, bro. So catch you up on the next zone, on the next video. Yeah. Peace and love.